Hello everyone, I'm Terry Ryder from Hotspotting and welcome to today's special webinar event designed to show you how to approach real estate in 2024 with confidence. We're going to do that by firstly analysing what happened in the year that's been and then projecting what might happen in 2024 according to our research and analysis. For the Australian consumer, there's no shortage of data telling us what happened to prices and rents recently. But what is in short supply is a plausible explanation of why things happened the way they did, and even more so, what to expect in the new year and how to approach 2024 with confidence as a consumer. Now today, Hotspotting General Manager Tim Graham will join me to discuss 2023 in review. Then we'll talk about our forecast for 2024 and in particular what areas we expect to do well and others not so well. Then we'll present a great special offer providing our #1 forecasting report, Best Buys, along with a free Hotspotters membership. And finally, we provide an opportunity for you to ask Tim and I all of your questions. We've got a lot to cover, so let's begin by welcoming firstly my co-presenter today, Hotspotting General Manager and experienced investor, Tim Graham. Hi, Tim.
G'day, Terry. How are you? Welcome, everybody. Thanks for joining us. I think we'd all agree that it definitely feels like December.
Absolutely. It's been a big year. I think it's been a big year for everybody in all sorts of ways, both professionally and personally. And I think a lot of people will be very happy that it's Christmas soon.
Yeah, absolutely. Well, I guess there's no better place to start today rather than, getting into it. Let's have a bit of a reflection of 2023 by highlighting a few of the, I suppose, interesting trends that we've noticed throughout the year. Firstly, 2023, home lending's up with loans for homeowners, as in owner-occupiers, investors, and first home buyers all increasing this year. We had the much touted mortgage cliff that dominated headlines for much of the year that just simply did not happen. Internal migration has continued to be a big factor with technology enabling people to work from home. So that exodus to affordability continuing to happen, Terry. And then, of course, the usual big predictions from the bank economists that at the start of the year predicting, the demise of property, and they were expecting, 20% drops, which just didn't happen. And obviously, the RBA increased their cash rate by 1.25% throughout the year. And, we still saw real estate progress into, positive territory, which would make you think that maybe there are some bigger factors at play than just interest rates, Terry.
Well, it's one of the big learnings for everybody from 2023 is that what's happening with interest rates is not the biggest show in town. And if you look at history, that's been shown again and again. But the economists working for the major banks of Australia needed to be reminded of that this year. But I'm not too confident they'll learn anything from it. They've got their theories about how real estate works, and they're not going to depart from them, even though they get their forecasts wrong so much.
Yeah. Well, let's start right there. Let's have a look at some of the projections or the predictions that we had from the major lenders at the start of this year. So ANZ predicted house prices to drop 9 to 10% in 2023, Brisbane and Perth to fall 12%, and then Adelaide to fall 17%. That was followed by Westpac saying that Melbourne and Sydney prices would fall by 18% in 2023. CBA said that Australian house prices would fall as much as 20% in 2023. And then NAB, Australian house prices to fall as much as 20% in 2023 again. But let's have a look at what the results showed. So according to PropTrack, the national market rose 5.5% and capital cities rose 6.6%. That's up until November of this year. Terry, you were saying earlier in the week that CoreLogic was actually even higher than that.
Yeah, it's one of the mysteries for consumers that if you look at the figures from all the different research sources like PropTrack and the ABS and Eskim Research, CoreLogic, you're going to get different numbers. They all have different methodologies. So PropTrack saying the national average rise for the year to date to November was 5.5%. The equivalent figure from CoreLogic was 8.3%, so even more bullish. But what they do agree on is that we did have what you might call moderate to solid price rises in house prices throughout Australia in 2023, which is a stark contrast to what was forecast by the economists working for the major banks.
So we saw a similar thing at the start of COVID, Terry, where people were economists was predicting 20% drops, and we in fact saw 20% increases. So they weren't 20% wrong; they were in fact 40% wrong. How do they keep on getting it so wrong?
Well, we might feel we're entitled to expect them to be real estate experts because they pontificate about it in major media very often. But the reality is they're not, that they're economists, and they turn their attention to real estate matters once in a blue moon. And they don't have the deep understanding that, such as the team at Hotspotting House, because we're living and breathing it 24/7, and they're not. But they're also, they have their theories about how things should work in residential property, rather than developing an ongoing understanding about how things do work. And they tend to believe that the biggest show in town is what's happening with interest rates. If interest rates rise, according to their reasoning, prices will fall. Now, I've never actually seen an instance in all the 40 plus years I've been doing this as an analyst of residential property markets. I've never actually seen an instance where rising interest rates actually caused property prices to crash. But they predicted that in 2020 when COVID struck, and they predicted it again at the start of this year, and they got it wrong. So what we learned this year again, or what was confirmed, is that there are other bigger forces in play, and we'll talk about some of those as we work through today's presentation.
Yeah, I mean, by no means are we denying the fact that there is a huge cost of living crisis, and we are all feeling the pinch with interest rate increases. But what we are also aware of is that it's not the number one driving factor behind whether real estate markets, do push forward or whether they fall backwards. There's obviously much larger acts at play that are affecting our markets all over the country.
Yeah,
so, Sorry, I was just going to say, let's have a quick look around the country at what happened in capital cities around Australia. So Perth saw 12.3% growth, Adelaide 9.2%, Brisbane 8.9%, Sydney 8.3%, Melbourne 1.9%, Canberra 1.8%, and then Hobart and Darwin, the only two territories with negative growth of 1.8% and -2%. Did you want to comment on any of those markets, Terry? Any surprises there?
No surprises, exactly what we might have expected. I think the big learning there is, firstly, that real estate performed again in a year when it was forecast that prices would crash. But the other big learning is that we don't have one property market in Australia. And I think you can look at these numbers and see that we have a series of local markets. If we could add to that the price data for the regional markets in each state and territory, and we'd get different numbers for them as well. But you can see that we had the 3 or 4 capital cities at the top did very well. Then we had a couple of capital cities that did moderately well with small increases, and then a couple of that actually had falling prices. That's actually the norm in Australian real estate. We don't have one market. We have lots of local markets, all driven by, we believe, local economic conditions. So it's important to keep that in mind, and we certainly keep that in mind when we make our forecasts for 2024.
Yeah. And what about, let's touch on Melbourne for a second, because if we think about 2023, it's had a remarkable turnaround.
It has, and it's shown up most vividly with sales activity. It hasn't yet translated big time into prices. That's also normal. That's why we chart sales volumes the way we do every quarter, because it's a forward indicator of what will happen with prices. Melbourne staged a revival around the middle of the year and turned very quickly into a very strong market with rising sales activity right across the board, the greater Melbourne area, but hasn't yet translated across the board into major price growth. Perth and Sydney and Brisbane are ahead of Melbourne in that regard, as the figures show.
Yeah. So let's have a look at some of the factors, that were at play in 2023. Obviously, at the moment, the nation's building far too little amount of dwellings. There's been a shortage of listings of properties for sale, and there's been an undersupply of homes for rent. So vacancies across Australia have been falling steadily for about 7 years. You can probably take out of it the COVID spike that we saw there for a little bit. But, this isn't a new thing. This has been happening for some time now. And at a time where supply shortages are in place, demand has kept rising, boosted by higher population growth levels. That's turbocharged by record levels of overseas migrants. As I mentioned before, home lending's up as well. So we're seeing that we're not just having owner occupiers in the market, we're seeing downsizes. There's a lot of different moving parts, a lot of different markets that are moving where, we've always been focusing on talking about overseas migrants, but there's a lot happening internally as well.
Yeah, absolutely. Now, you referred earlier to the figures showing that home lending was up. And the same month that the latest figures on home lending were published by the Bureau of Statistics, they also published the latest figures for building approvals. And at the time when home lending was rising, building approvals were the lowest levels for more than a decade. And that pretty much sums up why we have rising prices and rents in Australia. We've got an oversupply of demand at a time we've got an undersupply of everything that matters: new dwellings, listings for sale, and properties available for rent. That in simple terms sums up why in a year of rising interest rates we got price rises. Other factors, you mentioned the mobile population growth has been quite a big factor. Migrants coming into the country at record numbers, and also people moving around the country still, the exodus to affordable lifestyle and other factors. And there's also, I think, there's one of these intangible things that economists don't get their heads around and can't factor into their economic formulas, and that is that in times of economic disruptions, Australians put their trust in the safety and solidity of real estate. And we've seen that again this year, because it has been a year of great economic disruption with high inflation and rising interest rates and a wobbly economy.
And wars breaking out all over the world.
Exactly. There's a lot of disconcerting things happen that unsettle people, and we find that in times like that, people are more inclined to invest in real estate than at other times, and we've seen it again this year.
Yeah, and at the same time, we have also had some reports of investors leaving the market, Terry, and that brings us to the next point, which is about all the red tape and the challenges that we're seeing on the housing supply front. So what would you say, if you had to have a silver bullet on how to fix the housing supply, what would it be?
Well, pretty much the opposite of what state governments in particular have been doing for years, really. You referred to vacancies falling for the last 7 or 8 years. You can look at the graph for vacancy rates in Australia. It peaked in 2015, and it's been falling steadily ever since, except for the COVID spike. Now, you can list on that graph a series of events that have been major events discouraging investors. The APRA changes to investor-only lending. We had a federal election when Labor was threatening to disallow negative gearing and increase capital gains tax. And we've had a series of policy changes and legislative events at state government level, new taxes, increased taxes. They've all been deterrents to property investment. And the more that that's happened, the greater the diminution of supply of rental properties. More and more investors drop out as each onerous decision comes along from some level of government. So the silver bullet is to turn that around and actually start incentivizing property investors and start recognizing that they're not the problem, they're the solution. They provide 90% of the properties that people rent in Australia, and we can't keep demonizing them and disincentivizing them. We've got to actually encourage them, people to become investors and make them available for long-term rental.
Yeah, I think we see this in media all the time. Anytime there's a discussion around the cost of living crisis and rents going up, it's always painting a picture of an investor who's got 50 properties. But we know the statistics show that most property investors might only own one, and their mum and dad's trying to achieve something for their retirement. They're actually providing housing accommodation, but yet they're the ones who keep on getting discouraged to actually go out and buy more or to jump into the market for the first time.
Yeah, that's right. So I don't know whether it's politically palatable to do what's necessary. I think a lot of politicians are tinkering around the edges. They think if they make a show of doing something about it, like slugging people who use short-term letting options like Airbnb, to give the impression they're doing something about the rental shortage, but that's just a drop in the ocean. Recently, the federal government announced it was going to slug foreign investors with massive new taxes if they leave their properties vacant. Again, that's just a drop in an ocean of a problem. It's not going to fix the problem, but it gives the impression they're doing something while raising extra revenue from the housing industry, which is something that politicians regularly cynically do.
Yeah, that's true. And what about on the subject of not building enough dwellings? New builders had its own challenges throughout the last couple of years with builders going broke and the cost of construction and trades going through the roof. But a topic that you've discussed on stage many a time, Terry, is the cost to actually construct or to build a new home. Majority of the cost is actually not necessarily in the building materials, but in taxes.
That's right. Well, there's been a lot of research done on this by the industry itself, but also by independent sources like university researchers. And they've kind of agreed that depending on where in Australia, somewhere between 35% and 50% of the cost of a new house and land package is government taxes, fees and charges at all three levels of government. That's a huge whack. Now, the politicians who make these impositions on the cost of creating new homes in Australia, the ones who stand up before press conferences and say how much they care about housing affordability, but they've created the problem. And they continue to make it worse by passing laws with helpful design changes to new dwellings. One piece of legislation will add $10,000 to the average cost, and another one will add $50,000. By the time you accumulate all these legislative changes over a period of years, suddenly the cost of creating a new house and land package is increased by 100,000 or 150,000. And that's really the affordability issue in Australia in a nutshell.
Yeah. Well, we could go on about that for a long time, but let's move on to another trend that we've noticed this year, which is the trend to affordable apartments becoming very palatable now. And I suppose there's a bit of a shift in the paradigm that here in Australia, we need to buy something with a land component in order to get growth. But in recent times, we've noticed a bit of a shift there, Terry.
Yeah, and historically, it's true that houses on land have tended to have better capital growth long-term than apartments. And it's been assumed that it's the land component that's responsible for that. But we're seeing increasingly evidence of that paradigm shifting. If you researched suburb by suburb around Australia, you'd be surprised how many suburbs you would come across in locations like the Gold Coast, the Sunshine Coast, some of the capital cities, where in the same suburb, the growth in the past 12 months or the long-term growth rate for apartments is better than for houses. And that's because more and more people are making that choice. Affordability is a reason, but I don't think it's the primary reason. I think it's a lifestyle choice. It's a locational choice. A lot of people like that lock up and leave lifestyle. They like being able to get in what they would regard as a good location more affordably as well. Closer to the action as they see it for some people. And there's an increasing number of cohorts that actually prefer apartments to houses. Downsizers would be one, first home buyers perhaps just chasing affordability, lifestyle seekers. And then you've got a lot of migrants coming from overseas, from countries where living in apartment style dwellings is the norm. That's what they're used to. And so they're comfortable with that. So there's a lot of reasons why people are increasingly buying apartments over houses.
And also rent investors. I mean, apartment living really is a renter's dream because you can up and go and you can move around a little bit more if your jobs change or lifestyle changes can happen. And these days, I think since 2017, when maybe APRA put the brakes on overseas lending and things, developers are no longer rushing off overseas and selling out their complexes. Cookie cutter approach, 1-bedroom apartments at 40 metres square. That since then we've seen a bit of a flight to quality, and I feel like now these apartments are getting built with far better amenities. We're no longer living in shoeboxes. There's a lot more quality apartment projects because they can't get away with building those 40 metre square 1-bedders anymore.
No, the cohorts that are demanding apartments, like downsizers, they want to downsize in terms of getting rid of the stairs, maybe getting rid of the quarter-acre block of land or the acreage, but they're not downsizing in quality. They want the same quality of residence. So it's forced to rethink increasingly by developers of apartments that they need to be more conscious of the design and the quality of the product they're putting into those apartment buildings.
Yeah, and lastly, last comment I'll make on that is that there used to be a little bit more of a holding cost a lot of the time due to those body corporates, but it's also worth noting that in the apartment space, we've also seen some huge increases to the rental growth as well.
Yeah, and above average rental returns. The rental returns on apartments
Yeah.
are higher than houses, although you do have some additional costs like body corporate fees. One of the factors I think is overlooked. People think that houses show better capital growth because they have the land component, but there's a component that a lot of apartments have that most houses don't, and that's view. View is something that people will
Yep,
pay a
absolutely.
premium for, and most apartments, not all, have an outlook that houses on land generally don't have.
Yeah, very true. Okay, well, that's a pretty good recap of 2023. How about we have a look into the future of 2024? So, what does 2024 have in store for us, Terry? We've built up quite a bit of momentum in the back end of 2023. What's in store for 2024?
Yeah, momentum's an important word. As we approach 2024, a number of the major markets of Australia have rising sales activity. We chart that every quarter for our Price Predictor Index, and we've found that cities like Brisbane, Sydney, and Melbourne, which started the year struggling markets, as the year's gone on, sales activity has recovered quite dramatically. So as they enter 2024, they have a lot of momentum, and that kind of momentum with sales activity, which means buyer demand, generally translates into good price growth. So generally speaking, we don't see a lot of change in 2024 compared to 2023 because the conditions that created the growth that we saw this year remain in place for next year. We still have the shortage. We still have strong demand versus an undersupply of supply. We still have, even though the federal government may be talking about reducing the migrant intake, it's still going to be considerable. So we're still going to have that population growth factor. We're unlikely to have the negative factor of interest rates rising much next year, if at all.
Yeah.
Some punters, so-called experts, are telling us they think the next interest rate change will actually be down, not up. So that's an overrated factor, as we've discussed previously, but it can be a factor in giving people confidence and comfort that they can buy, knowing with some certainty what their interest rate payments will be.
Yeah. Well, as we've already mentioned, we don't have an Australian market. We have thousands of property markets around Australia, but maybe let's have a look state by state and see what you think is in store. So why don't we start up the top? What about Northern Territory? We didn't see a hell of a lot of positive news up there. What do you think's in store for 2024 up in Northern Territory, Terry?
Well, it's had quite a poor year by national standards
Yeah.
and I can't see it changing much in 2024. Now, we're always looking for change because markets do change. We're looking for events that are going to take a market to a different level, up or down. But nothing of that nature is really happening in the Northern Territory in Darwin. It's got the weakest economy in the country. We think that real estate markets are very much associated with what's happening in local economies. And the Northern Territory has the bottom ranked economy in the country, not a lot of growth happening there. And that looks set to continue. So we don't expect a lot of price growth in Darwin. The one thing it has in its favour is affordability plus the highest rental yields in capital city Australia. But if investors can't see where the capital growth is going to come from, they're probably not going to buy there.
No, that's right. Okay, heading clockwise over to Queensland.
Regional Queensland is probably going to be one of the star growth markets in 2024. The momentum was building at the end of this year in markets like the Gold Coast, Central Queensland, centres like Gladstone, Townsville and North Queensland. Notwithstanding the recent weather events up in Cairns, there's quite a lot of momentum building in regional Queensland markets. Very affordable, great rental yields. The population growth data very much favours Queensland. It's where a lot of the internal migration goes. So we're expecting to see some pretty good growth. Not everywhere, but in most parts of regional Queensland.
Absolutely. And heading south to New South Wales?
I should touch on Brisbane before we leave Queensland.
Okay.
I'm just talking about the regions. Brisbane certainly gathered a lot of momentum in 2023. That's continuing in 2024. And the more we move towards the 2032 Olympics, the more we're going to see the elevated infrastructure spend that's going to take the
Yep.
Brisbane market to another level. Regional New South Wales, we saw evidence in the latest quarter that there was revival in that market as well, but it's not across the board. New South Wales is a pretty big state, and there's lots of different markets within that market. Some of those iconic places that kind of went crazy in the COVID boom, like Byron Bay, and overshot, I believe, true value, have come back a lot, and they still haven't entered into recovery. But cities like Wollongong and the nearby Shellhaven areas are very strong markets. Newcastle and nearby regions strong. Orange is strong again. And then you've got cities like Tamworth are doing very well. So there's going to be growth markets to be found affordably in New South Wales regional areas in 2024.
Yep.
Sydney as one of the strongest markets in the country as we end 2023. It's the dearest market in the country, but there's a lot of wealth and a lot of high incomes in Sydney, and the market just keeps performing. And it's going to be a pretty steady growth market in 2024, not a boom market.
Yeah. So some positive news there. What about if we head into ACT, not looking as positive?
No, very similar to Darwin and the Northern Territory. Northern Territory, the weakest economy. The ACT is the second weakest, and there's not a lot happening. There's no big infrastructure spend, for example. It's just it's just chugging along. It's kind of steady, but it didn't produce any price growth in 2023, unlike some of the bigger capital cities. And there's nothing changing in the dynamic there to suggest that 2024 will be any different.
Yeah. Now coming into Melbourne, strongest economy in the country.
Yeah, ranked number one in CommSec State of the State report published most recently, and that also has coincided with the rise of the Melbourne market in terms of sales activity. It hasn't yet translated into big price growth, and so that's the factor to come, because there usually is a time lag between that big uplift in sales activity and translating into elevated prices. So that's probably what we're going to see in the first half of 2024 in Melbourne. Regional Victoria, plenty of steady markets there, not as dynamic as Queensland and New South Wales, perhaps hampered by the reality. We touched on the deterrence to property investors in different parts of the country. There's probably nowhere worse at that than the state government of Victoria. They really have been slugging the industry with new taxes, increased taxes, and legislative changes. So that kind of will be a bit of a break on growth in regional Victoria, perhaps.
Yeah, so for those that are listening and heard us talk earlier about the 1.9% growth here in Melbourne, they might be a little bit confused by why we're saying it's still such a positive market. And I might pause for a second and get you to sort of explain to a few listeners that may not be familiar with your Price Predictor Index, something that, we're the only people in the country that perform this task. And that is that you analyze every suburb in Australia every quarter to look at sales volumes as opposed to median prices. Could you explain for our audience why you do that?
I do it because I've observed over the many long years I've been a real estate analyst and writer that sales activity changes first and prices react later. It's a natural component of the property market. So we've seen it happen when markets are rising. We've seen it happen when markets are falling. We often are the first to see a change in a market. When prices started to drop in, say, 2022 in Sydney, Melbourne, Brisbane, media and economists attributed it to the start to the rise in interest rates, but the market had actually been dropping considerably before that. The sales activity had fallen away. So we forecast that around about April, May, we start to see the first signs of prices starting to drop in those big cities. But sales activity had fallen away in the previous 2 quarters to allow us to make that forecast. So, it's a great forward indicator of what will happen with prices maybe 3 or 6 months down the track. So that's why we track it, and we put it into the Price Predictor Index every quarter, with giving every suburb and town a ranking as a rising market or a declining market, or whatever we see as a trend in their sales activity. Now, Melbourne was particularly strong as we got towards the end of 2023, having started the year very weak. And in case of Sydney and Brisbane, we're seeing that translate already into pretty good price growth, but Melbourne's just a little bit behind. And we'll see, I think, better price growth in the first part of 2024.
I know, there's the old saying that there's no crystal ball when it comes to real estate, but if you think about it in terms of shares, there's future markets. So a lot of people who analyze the share market are looking at the future, trades based off people's orders on certain things, whether it's coffee, whether it's, people buying currencies and things, but they're looking at new demand coming into products, and then they're buying that asset, hoping that it's going to increase. And this is very similar in the Price Predictor Index. We see an increase in demand, which is the sales volume increasing, which is why we believe that price growth generally follows.
Yeah, exactly right. And those places where prices haven't risen in 2023, like in Canberra, are places where sales activity has been very weak. So we didn't really expect to see price growth in Canberra this year for that reason.
Which brings us to Tasmania, much of the same as Canberra.
Yeah, it's Hobart's kind of a steady, but not really going anywhere. It's because Hobart has previously been a national leader. And going back 5 or 6 years, it started to rise. Its economy came from being the bottom ranked economy in the nation, gradually rose up to be the #1 economy in the nation over time. And that coincided with the rise of the Hobart property market. So it's had several years of really strong growth. It's past its peak. It's still solid, but we're not seeing the growth that we did before. Not surprisingly, it's no longer the cheapest capital city in the country. That's one of the factors. It's now more expensive than Perth and Darwin and Adelaide, and so it doesn't have that price differential advantage that it used to have. Regional Tasmania is actually one of the weakest markets in the country now. Sales activity's dropped a lot there, so we're not expecting much performance there next year.
Heading over to South Australia, Adelaide being the second best performing capital city.
Yeah, look, it's the Mr. or Mrs. consistent amongst those property markets. It's just such a steady performer. It's underpinned by the second ranked economy in the country, according to CommSec. That surprises a lot of people that South Australia, which has a history of being a low growth state, is actually a very strong economy these days. And that's coincided with the rise of the Adelaide property market. Throughout 2022, when Sydney, Melbourne, Brisbane dropped, Adelaide prices didn't. They kept rising. 2023, steady again. It's not like a booming market anymore, a rising market. It's just very steady. So we expect 2024, it's going to continue to attract buyers because it offers affordability and pretty good rental yields underpinned by a strong economy. Yeah.
You could say safe as houses.
Absolutely. And, I don't think people really understand what goes on in the Adelaide economy. It's a national leader in a number of things, including high-tech innovation and alternative energy, which are important things to be a national leader in. And regional South Australia never gets discussed. And you and I are really interested in it because we've found some really good performing regional markets there to recommend to hotspotting clients. Very affordable, great rental yields. And when you look at the numbers, in the last couple of years, regional South Australia has been amongst the national leaders on price growth, and but it never gets talked about.
No, that's right. Okay, finishing up in Perth, Western Australia, the #1 leader for 2023.
Yeah, on price growth, certainly Perth has led the nation, but what we're suggesting is it won't be the national leader in 2024. And again, the reason is that we've seen in the latest analysis a big drop off in sales activity in Perth for the first time. For 3 years, it's been rising, and prices have followed that. And we saw the evidence of that, particularly in 2023. But now we're starting to see the peak being passed and starting to taper off. And no one else has picked up on that because they tend to focus on the price data. That's yet to come. So I think we're going to see a slowdown in price growth in Perth in 2023 after 3 really strong years. We're not suggesting prices will fall. We're not suggesting it's going to be a weak market, just not as strong as we've seen recently. Regional Western Australia will continue to have some growth markets, though. We really like places like Bunbury, which is a really strong regional city, and also Geraldton. I think it's got a lot of potential for growth, but avoid those pure mining towns. They're high risk and volatile.
Yep, very good. All right. Well, we've gone around state by state to see what's hot and what's not. The next is to talk about what our predictions are for LGAs around the country in 2024. So we've just released our national top 10 best buys. Now, before we dive into talking about any of these locations, Terry, I thought what we might do was go back and have a look at this exact same report from 12 months ago, and see what the results are. A bit of a report card, so to speak. And then once we get through that, I'm also going to share a bit of a special we've got as a Christmas special for our viewers that involves that report. So let's jump into last year's results. We're going to go through the top 5 locations that were selected last year. Number 1 was the city of Onkaparinga in the southern suburbs of Adelaide. Suburbs within this LGA achieved capital growth ranging from 12% through 18% over the past 12 months. It's probably worth noting that at the bottom of this range, we've truly doubled the performance of the national average. So, investors that took our lead on this report last year, if they had spent $525,000, their properties would be worth $610,000, judging by the median, which is $85,000 worth of uplift at 16% growth. And there's some high performers in there at 17 and 18% as well. Heading on to pick number 2, Toowoomba in Queensland. Suburbs within Toowoomba achieved growth again in the double digits, ranging from 10% through to 23%. And again, worth noting, Terry, when we select an area that we're classing as a hotspot and giving people a recommendation that this could be a good investment for them, it's not a flash in the pan, let's try to get some quick 12-month growth. It's really taking a long-term approach in real estate. It's always been the philosophy. But these are not only would you believe that they're going to be long-term good assets, but they have achieved short-term growth as well.
Yeah, the perfect place to invest is an area that's going to give you growth in the first 12 months, so you can very quickly achieve equity, but in particular perform long term. So if you've got both in the one location, and you've got the ideal investment location. So these are all locations that we picked for their long-term qualities, but they have performed over the first 12 months as well, which is great.
Yeah. Toowoomba is a really good example of that. You and I have been bullish on Toowoomba for some time, but if you think about it, we've seen growth, which is quite exceptional growth this year. But this is still prior to a lot of the big infrastructure stories that Toowoomba has now become quite known for, with the inland rail, the brand new hospital, all of the operations going out at Wellcamp Airport, with things like Boeing injecting $1.3 billion into an aerospace program. All of these things are still to come. So the future growth of Toowoomba, in my opinion, is still incredibly strong.
And a hospital, which currently is costing over $1 billion, will probably end up costing $3 billion. But all that growth that we've seen happening, even though that I think Toowoomba is only just getting started in terms of its growth rate.
Yeah, I tend to agree. Heading on to pick number 3, we had the city of Ipswich, which is southwestern fringe of Brisbane. Suburbs throughout that LGA achieved growth between 10% and 20%. Some of those locations you can see on screen right now are areas that I say have been affected by what I call the ripple effect. So you've got little micro cities like Springfield, which are it's a master planned $40 billion city. It was actually voted the best master planned city in the world, believe it or not. We're $20 billion into a $40 billion project there. And I suppose where I'm going with this is that you don't necessarily have to be right in the thick of those cities to benefit from those cities. You can be, on the outskirts in a more affordable location, but still get all the benefits of all the infrastructure going on there.
And Redbank Plains is a great example of that. It's right next to the master plan community of Springfield, but it's not within it. It's much cheaper than Springfield, but you can still access all that modern infrastructure that Springfield has created, like university campus and private hospital, etc.
Absolutely. Now, pick number 4 was the city of Rockingham in Western Australia. Suburbs here range from 12 to 16% in growth for the last 12 months. But on top of that, and this is what I think we don't talk about enough in terms of picking a hotspot, we obviously all want capital growth because that's how we can propel our wealth. But certainly in times where we have seen interest rate increases, a rental yield is very important. LGAs throughout here, you're getting about 6% at the moment. But more importantly, we've seen 19% rental growth in these markets in the last 12 months. So with growth like that, your 6% yield can turn into an 8% yield within a couple of years.
Yeah, absolutely. So again, this has been an outperformer. Perth has done 10 or 12% on average, but all of these suburbs have done that or more. And again, like all of our top 5 picks that we're showing from our report of 12 months ago, these are locations at the affordable end of the market. And some people believe that the cheap areas don't show very good capital growth. Well, the statistics do disagree with that continually. And these figures that we're presenting today provide further evidence that these affordable areas with the better rental yields also can deliver very good capital growth.
Absolutely. Okay, and then on to pick number 5. Again, in the city of Salisbury in Adelaide, we saw capital growth in the region of 12% to 20% growth. And again, all remarkable results in the same year that the 4 major banks predicted a real estate demise. So, pretty remarkable to be able to get it so wrong. But
again,
again, that's a good point. So,
2021, when we had that amazing boom, they were all forecasting 5 or 6% growth, and we got 25, and they just didn't see it coming. I'm sort of amazed that they keep their jobs, given that they fail on this one every time.
Well, the only thing they don't fail to do is sell newspapers headlines like that.
Yeah, well, that's probably part of it, but it's about clickbait, but also I think they actually believe the forecast that they put out there. They just they continually underestimate the resilience and strength of the residential property market across Australia.
So that was the top 5 picks out of the top 10 hotspots of this time last year. But as I mentioned, today we've just launched our best buys for 2024. So for our viewers that are come along and watch this webinar either live or on replay later on, we are doing a really special offer for our viewers as a bit of a Christmas special. So what we're going to offer is the national top 10 hotspots, best buyers hotspots, I should say, for $249, but we're going to throw in a hotspotting membership or a hotspotters membership valued at $299 at no extra cost. And why this is really exciting is back in November this year, we released a brand new members portal, which has got some really exciting resources in there for investors. You can search any suburb in Australia and see the latest up-to-date real estate metrics. So last 5 years growth, the current median price, rental yields, rental growth, all the types of data that you need to make an informed decision. But you can also look at valuations on any existing piece of real estate in the country. So if you're looking to buy a property, you can see what it's valued at. If you wanted to have a look at your own portfolio and see and track the value of your properties, you can also do that through the new members portal. And then there's a heap of other calculators and videos and tutorials and all types of things. So this is a pretty exciting offer. $249 report that'll tell you the top 10 best locations that we believe as long-term performers, not only in 2024 but over the next 10 years. And then we're also going to throw in a membership worth more than the report for 12 months. So if anybody's interested in taking advantage of that deal, we've got a QR code on screen right now. That'll take you to purchase that report. And when you do, there'll be a purchase a comments section as you go through and add it to the cart. Just be sure to make note that you saw this deal within the webinar today, and we'll be sure to send you a membership straight away. So Terry, that brings us to the end of our presentation for today, but we've done very good on time and we've got a bit of room for Q&A at the end. So do you want to take a couple of questions first up?
Yes, anonymous attendee has asked us a number of questions. It's asking, what are your thoughts on interest rates in 2024? Looks like the US is cutting rates. It's unlikely in Australia in 2024. Well, maybe not. Of course, it's the so-called experts can't agree on this, and the Reserve Bank is sending out mixed signals. What it is indicating is that there may be one more rise, but they're expecting they're not to be.
Yeah.
And many of the analysts who make forecasts about interest rates in Australia are suggesting that they expect that there'll be no further rises, and the next move will be an interest rate cut. Maybe it won't be in 2024, it might be 2025. But certainly there's very strong noises coming out of the United States, as you point out, that they're going to be looking to cut interest rates because they've gone much higher, I think, than Australia have.
Yeah.
There's another question about our thoughts on regional Victoria. I see Geelong, a lot of investors are selling and getting out of the Vic market. Look, it relates to the factor that Tim and I discussed a little bit earlier in the broadcast, that the state government of Victoria is probably the worst in the country in terms of demonising and deterring property investors, which is really a foolish way to go, because it's just making the rental shortage worse. People are selling and getting out of Victoria. It's a shame because there's so much potential growth in terms of capital growth, so many good places to invest like Ballarat, Geelong, Bendigo, Shepparton and other places, and yet the state government is proactively discouraging investors, and many are selling up and getting out more so than anywhere else in the country.
The only other point I'd note on Victoria is that we have seen some strong rental growth here. So our rental yields are finally becoming a little bit more appealing than they maybe have in previous years. So, we've seen, you mentioned Shepparton, there's some other areas like Sale that we've recently done some reports on that are showing over 5% rental yields, which is quite strong for Victoria. And then again, in the apartment space, we're seeing some strong growth in some of the apartment markets throughout Melbourne.
Okay. Another question about apartments in Sydney. A lot of faults. So I think asking why we're so bullish about apartments, are expecting migrants to live in these apartments. Look, I think the apartment buildings with design faults and construction problems are not. Media tends to make it look like it's right across the board, but that's what media does. I think it's a very small minority of buildings that have these problems. The vast majority do not have those problems. People are demanding quality apartments for all sorts of good reasons, and I think that's going to continue.
I mean, I think you're right, Terry. Apartments tend to get a pretty bad rap in the media because of things like the fires that were caused in the past and really poor designs. But I can tell you, you go and buy a 20, 30-year-old home and think that you're not having challenges with asbestos and all those types of things as well. It just comes down to, when you buy real estate, you need to do your due diligence. You need a licensed building and pest inspector, whether it's an apartment, whether it's a house, anything. You've got to do your due diligence on any piece of real estate you buy. So when we're talking about apartments, we're using it as a generalization that we are seeing growth in apartments, but on any piece of real estate, you have to go and make sure that you get a licensed inspector to tell you it's okay to buy.
Absolutely. I mean, it's so essential. I'd be amazed anyone didn't do that. I think most of the problems with apartment buildings that have been in the media are to do with new construction more than established product.
Terry, what are your thoughts on the chinchilla property market? Christine is saying she's built a 4-bedroom house 9 years ago and currently owe more than it's worth.
Look, it's I understand, Christine, that market was sort of one of the flavour of the month for regional markets back when the resources boom was happening, and it escalated and then it fell away. And so if you bought at the wrong time in that cycle, you may end up with a property that's worth less than you paid. But I think the recent trend has been positive in markets like Chinchilla and nearby Dalby. Demand's improved and we're starting to see values rise. So if you've owned the property this long, I would perhaps suggest being a little bit more patient. You should get into the black and the positive in terms of the value of that property, given the trends we've seen more recently.
Yeah, I think Terry, you and I have spoken about this many a time with properties where you do find yourself maybe upside down, like Christine has found herself in now. There's an argument that you make money in time in real estate, not timing the market. So you've got to hold it for long enough and then you should make money. But at the same time, I also think about the debt that's associated with that. And if you could unload the property and then reinvest that same debt to go into a property that was a higher performer, I would consider, even making a loss just to be able to get out of it and reinvest it, because some markets you can take a long time to get out of it. So I'm not necessarily on chinchilla, but certainly what I'd be looking at, my recommendation would be, are there any ways that you can reduce your costs there? When was the last time you refinanced, and really get somebody who's familiar with that market to give you a good insight and a bit of direction on what you could do.
Absolutely.
Rowena has asked, why is Perth not popular when it has so much to offer? I'd probably argue that it has been incredibly popular over the last, certainly the last 12 to 18 months. What Terry was saying earlier about the price growth, the sales volume has started to taper off, would be a reflection that maybe it's starting to cool.
Yeah, I mean, it's been strong for 3 years. Markets can't boom forever. And I generally find in my experience that 3 years is probably the maximum extent of an upcycle for a real estate location. And Perth's had 3 very strong years. Inevitably, we get to the point where all the demand for that location has been largely satisfied, and it starts to taper off a bit. So it's going to be perhaps a little bit more moderate, I think, in 2024, but not weak. And I don't expect prices to fall.
We've got another anonymous one that says, could you give your thoughts about coastal suburbs of Perth, which seem undervalued compared to eastern states' coastal suburbs?
Yes, well, certainly one of the top 5 picks from 12 months ago that we highlighted early in the broadcast was one of those places, the city of Rockingham, which is a cluster of affordable coastal suburbs in the southern part of the greater Perth area. Very, very popular for their affordability. I mean, there's not many places, as you point out, that you can buy coastal suburbs at those sorts of prices, even after the growth we've seen in the last few years. Still very affordable and very close to very, very major jobs nodes, keeping in mind that most people don't work in the CBD, they work in suburban jobs nodes. So it's got a lot to offer, city of Rockingham. Further south, Mandurah has been a very strong, successful market for investors and lifestyle seekers. And you go further south again to Bunbury, we mentioned earlier in the broadcast, is one of those markets we expect to continue to show growth in Western Australia.
Bruno's asked, did you predict these top 5 regions of 2023 will still provide strong growth in 2024? And should we expect to see them again next year on the top 24 charts? It's a good question.
Yeah, well, as we pointed out when we were discussing them, we didn't pick them just to show growth in 2023. We selected them to be good performers long term. Now, in any 10-year cycle, there will be ups and downs for all locations. I don't know of any location that's just shown boom time growth for 10 years. But we do expect those locations to be long-term performers. They won't necessarily be at the top of the charts in 2024. But they will be, when we look back, say 5 years from now, I would expect that those locations will have been very good long-term or long to medium-term performers.
Yeah. I've had somebody ask if we could repeat the deal. So the deal that we've got for the Christmas promotion is that if you buy our national top 10 best buys for 2024, that report is a 204-page document, and it's loaded with information. I'd say that in comparison to previous years with our new formatting and everything, it's one of the best reports we've put together. And we've got that on sale for $249. But for anybody who purchased that and mentions this webinar, we're going to throw in a Hotspots membership, which is valued at $299. It's a 12-month membership, gets you access to our members portal. So if you follow the QR code next to my head up here, you'll be able to find that on our website. Just mention in the comments as you're purchasing it that you've watched the webinar, and we'll be sure to set you up with a free membership straight away.
A couple of positive feedback, Tim. Margaret's making a comment rather than a question, pointing out that she used our Cheapies with Prospects report at the end of 2019 and bought in Salisbury. That's one of those places we did recommend in our top tips 12 months ago. And what she paid $280,000 for is now worth upwards of $500,000. So almost a doubling in value. In a short period of time. That's a great result, and I imagine that the rental return that you're now getting based on that $280,000 purchase price will be substantial. It might be 7, 8, or even 9% by now. So that's a great result. I love to hear stories like that. And also I note, Tim, that the feedback monitor, we always run these with all our webinars with various guest presenters. Usually there's a majority of people who say very informative. There's always a few dissenters, but I'm pleased to say that today, everyone 100% feels that the webinar's been very informative. So that's good to know. We hope to make it so by providing good information and analysis, and give you some thoughts of what might happen in 2024.
Yeah. And on the subject of feedback, we're always interested in how we can make these better. So by all means, if anybody has any feedback for us on what else you'd like to see in 2024, we'd love to hear from you. Send us an email at admin@hotspotting.com.au. And lastly, one more poll just on preferences that people might have for these webinars. We've often held them at lunchtime, trying to get people on their lunch break, but we're also open to doing some after hours. So we thought we'd just throw up the quiz up there to see whether or not people would have a preference on what they would like to see next year. And as I see now, it's quite mixed. People, 63% saying lunch and 45 after hours. So I think we might be mixing it up next year, Terry.
Changed already. It's now, it was almost 50-50 there for a moment. It's interesting what changes people cast their votes, but it is pretty much half and half. That's interesting. We believe that the research generally indicated more people were comfortable with lunchtime, but not everyone's the same. So maybe we'll mix it up this coming year and have some evening webinars and some lunchtime webinars. Okay.
Well, I think that brings us to the end of today's webinar. I think the last thing we wanted to say was just a big thank you to everybody for your support throughout 2024. We wish you all a very Merry Christmas, and we look forward to seeing you again next year.
Yeah, absolutely. Thanks, Tim. Thanks, everybody, for your participation today and your questions. I hope you got really good value from that. We like to think that at Hotspotting, we have a better understanding of the dynamics of real estate than certainly the bank economists do. And our forecasting is much better than theirs. I think the proof of that is in the results. So we value your support and the faith you place in our forecasting.
Yeah. Last thing before we go, there are a few people asking whether today's webinar was recorded. It will be sent out as a recording later today. So anybody who's registered for the webinar will get a copy of it. Thank you all from the team here at Hotspotting. We wish you a Merry Christmas, and we'll see you again next year. All the best for the break.
Merry Christmas, everybody.